Hi, Matthew. It's Simon Clarke from American Lithium in Saudi Arabia for the Future Metals Forum, and keen to give everyone an update on where American Lithium is at.
Good to see you. And you're on the road at the moment, aren't you? You're over in Riyadh. Now that seems to be becoming a little epicenter for mining and mining investment. How's it going over there?
Yeah, it's interesting. It's the first day, so the conference doesn't really get going till tomorrow. But lots of requests for meetings. There's lots of Saudi and Emirati money now getting into battery metals. And then obviously on our side as well, lots of interest here in uranium. You know, a number of the countries in the region are tying themselves to uranium, as a base load going forward. So definitely a good place to be in an interesting time when, lots of investment flowing into this area.
Not hearing good things, and they're chasing uranium, aren't they, as well? Well, look, today I know you're on the road, I know you've got people to see, etc. But so thank you for dialing in. Appreciate that. I do want to talk about the Falchani PEA and imminent PFS, but I got to kind of start with the news at the moment, which is obviously the Ingamet and MinEm's attempt to persuade the Supreme Court to overturn recent court ruling. How's that? Well, when did you expect it, and what does that mean?
Yeah, I mean, Matt, I think we thought we hoped it wouldn't go down that route purely just because it would be nice to finally put a ribbon on things and finish it off once and for all. As you know, we've always said, regardless of what ever happens, I mean, 32 concessions out of 172, it's 15 to 20%. So we're going to drive on regardless. But it's been a frustrating process from the length of time it's taken. But obviously, we've had extremely strong results from the Peruvian judicial system, and the Superior Court ruling couldn't have been any stronger. Unanimous, 3 judges throwing out every argument from Ingamet and MinEm. But we did think there was a chance that the legal departments would just simply take the final legal step here, which is to petition the Supreme Court. Extremely unlikely to proceed. I think the Supreme Court effectively takes on about a quarter of the cases that are petitioned. The rest get thrown out before it even starts, and we think that's what will happen here, especially given it's not really a matter of law or anything for national security or anything major. This is the facts of the case are pretty clear cut. So it's simply a final attempt for them to kick it down the road a little bit further, and our view is it'll probably get rejected by the Supreme Court over the next couple of months.
Okay, so that's the time I was going to ask about timing. So we'll hear more over the next couple of months as to where that goes.
And I think, Matt, the key point is a unanimous 3-judge decision in our favor would be extremely hard to overturn, even if the Supreme Court took it on, which we don't think they will. So, the arguments, such as they are from MinEm and Ingamet, were dealt with very, very firmly by the Superior Court. And so this is just, the regulators and the legal departments really are paid just to take the thing along as far as they can. And that's typically what they try and do. So, you hope common sense will prevail. It clearly didn't. But at the end of the day, we're pretty certain this is where it will all end.
Okay, because it's been an interesting time, obviously, for Peru, but huge period of uncertainty, which has, it seems to have sorted itself out politically recently. But the rule of law is well established. The application of that rule of law by the Supreme Court, they've had one go of it, and having another go, that's just a process they feel they've got to go through. But
I think our view is that it allows them to tie a ribbon on it and say, at least we did our best.
We gave it a go to its full extent. Okay, like I say, let's leave that. There's no point in speculating what may or may not happen. But I think you've been clear in the press release about that one and now. So let's just park that up and see what happens in the next couple of months. Can I get on? I do want to talk about the thing which is of more interest, which is in terms of driving the value of American Lithium, which is the PEA Can you on Falchani? Can you hit us with some of the numbers first, and then we're going to pick it up with where that goes?
Yeah, I mean we're really excited. Like I said, you put court situations to one side, and you get on and you drive the business ahead. And I think the team in Peru did an excellent job moving things forward during the last administration when times were difficult. And we're starting to reap the reward of that. I mean, we obviously saw an extremely large increase in the resource at Falchani at the back end of last year. And that's now segued into an updated PEA, which is a key step on the road to PFS by the end of Q2. So, we've more than tripled the NPV from the last PEA, which was done in early 2020. The NPV on a lithium carbonate only case goes up to 5.1 billion. You've got after-tax IRR of 32%. OPEX has gone up a bit to reflect, obviously, post-COVID inflation and some of the inflationary pressures that we've seen in recent times. It's gone from about 4,000 a ton to 5,000 a ton, which still places it in a post-COVID world as one of the lowest OPEXs out there. So we're really excited by that. And the initial capital for phase one has gone up from 575 million to 681. So again, yes, it's gone up, but not significantly. And I think that's a real testament again to the work that we've been able to do through the drill bit and also on the met side. The other thing that we did do, Matt, and for the first time into the flow sheet, we brought SOP of high purity as a byproduct. Very strategic in Peru for the agricultural sector. It's very unique globally that you have a project that's actually going to have a significant benefit on two key sectors of the economy. Mining and agriculture are probably two of the biggest in Peru they are. So SOP will really help the agricultural sector locally. And then you've got cesium sulfate coming in as well. So we have a base case scenario, lithium only, 5.1 billion MPV. We then bring SOP and cesium into the phase two. So we have a ramp up going from 23,000 tons to 45,000 tons, ultimately up to close to 80,000 tons a year. And the SOP and cesium come in the phase two. The overall NPV then goes up to about 5.6 billion, and you've got an IRR that's getting close to 40% at that point. So really strong economics, very excited with it. And again, this is pretty close to PFS standards. We will do some further flow sheet optimization and potentially a little bit more drilling at Falchani before we come out with the PFS by the end of Q2.
Right. Obviously, PEA, I guess understandably, plus minus 30% in terms of the accuracy around the economics of it. PFS will give it a little bit more certainty around that one. But I think more generally, people kind of looking into lithium space don't necessarily understand the difference between, say, hard rock, conventional hard rock project, clays, lithium brines, and lithium pegmatites at the moment, obviously, is another phrase which people have been picked up in the last 6 months. Is how do they value a company? How do we look at your project? Let's say Falchani specifically. If we could put it in gold terms, can you just kind of run us through that?
Yeah, I can try and give you a kind of comparison. I mean, people, obviously, what they call conventional lithium mining is seen at the moment as, like the iron ore situation in Australia. So people, the miners don't look to produce a final product or something that's final. They dig it up, they concentrate it, they then ship it to China, and then they refine it and upgrade it there. So who knows what the overall op cost is, but that's seen as the traditional approach now for lithium. A project like Falchani is different because it's much more like conventional mining. It's a conventional sulfuric acid leach that produces a high purity lithium carbonate through the flow sheet. So again, much more like a traditional gold operation. So to give you a couple of numbers, like if you're comparing apples to apples and looking at $2,000 an ounce AU, our deposit at Falchani, which is about 5.5 million tons of lithium carbonate on an M&I basis, and another close to 4 million tons inferred, would be equivalent to a 107 million ounce gold deposit. And then when you compare again using the same metrics, our OPEX, and you again looking at $2,000 an ounce gold, that would put the OPEX we're operating on effectively in about $453 an ounce. So that gives you, our OPEX at just over $5,000 a ton. LCE is equivalent to $453 an ounce on a gold operation. And then if you look at the scale, Matt, you'll see in the PA we're looking at about 2.6 million tons of lithium carbonate production over 43 years. On a gold situation, that would effectively be 29.5 million ounces produced over the same period, about 686,000 ounces of gold over 43 years. So, some of those metrics can maybe help people, and I do think that the flow sheet that we are doing is much more of a conventional mining, again, that produces an end product. So I think the gold comparison is actually a really good one to help demystify the Falchani operations.
Oh, for sure. Crikey. So the margins are good, and I say life of mine is extraordinary. Okay, that's really helpful. So the timing of the PFS will be what?
And by the end of Q2. That's the current
end of Q2.
plan. Yeah.
Okay.
And this is a big step on the way. As you can imagine, DRA are a top-class firm, so everything's been done on vendor quotes. And, again, we're going to refine the flow sheet a bit further and ideally do a little bit more drilling. But, this is a big step on the way to PFS. Obviously, reclassifying the resources reserves as well will be the next step.
Right, and I just want to be really clear about doing business in Peru. Obviously, Macusani, you've talked about in terms of the petition by Incomat and Minim on the uranium, right? Is there anything like that likely to happen on the lithium front? I know they're completely different commodities in terms of security, etc., but how confident are you about doing business in Peru? Do you maintain confidence?
Yeah, we're very confident. As I say, the 32 concessions impacted out of 173 that we hold in total, both do impact our uranium and lithium resources to a certain extent. But I think, we are now so much further through the judicial process than we were before. We've high confidence that this will get resolved in either event. And I think really what that then does is just takes away any concerns that around risk in Peru, because Peru is typically a very pro-mining, jurisdiction. And I think the way the judicial system has operated in our favor should give people confidence. Yes, it's taken time. And we're hearing a lot of positives from the current government. We're still waiting on some further drill permits, but they've made a public commitment recently to clear the backlog and then to continue to fast track permitting for building mines. So we really believe that Falchani can be at or close to final investment decision to build it by mid-2025. So, there's a lot of progress being made. It's taken time, but as they fast track things and as things become clearer, it's a faster permitting process ultimately than it is for us in the US on TLC.
Okay.
So,
can I just make sure I'm really clear about just sticking with Falchani for a bit, and I'll come back to Macusani. With Falchani, with this PEA and the PFS, in terms of the numbers that you're putting forward, and the gold equivalent numbers are really, really interesting, because I think it's help more of the market understand exactly the scale of the opportunity that is. Has that come from, reducing cutoff grades? Has it come from engineering? Has it come from, in terms of like growing that resource size, how is that being done? Is this, genuine growth? Is it genuine growth?
The genuine growth through the drill bit. We were able to reduce the cutoff grade slightly in the last resource, because the economics of the project are now better understood. So we didn't cut the cutoff grade to if you like, pad the resource numbers. The resource was expanded through the drill bit, and again, I think being able to drill over the last year in Peru was a really major achievement by the team, and that's really been reflected in that. And I think the economics, as you can see from the PEA, but also distilling it into a gold example, are phenomenal. And again, the scale of the project just gets bigger and bigger. We talk about a resource that's now, and I know you can't combine the two, but it's 9.5 million tons if you bring in M&I and inferred, and yet it's open on pretty much all sides. So we think this is a colossal deposit that's just going to continue to get bigger.
Right. Okay. So I just needed to ask that question. And now bouncing back to Macusani on the uranium side, you've talked to us in the past about spin-outs, and I want to be clear where your head's at, because we've seen a lot of, some old projects being dusted off and put out into the marketplace, which, I've better not name names, seeing a lot of kind of crap come into the marketplace. We've seen a lot of roll-ups also happening, but they're of a certain type of business model where perhaps getting the production's not high on the list. It's more about driving value through, portfolio build, as it were. If you believe that Macusani is something that can actually get into production, that can actually create value, you've got a choice to make, whether you kind of go with a party like that who perhaps have a portfolio of not so good projects, and they will just let them sort of sit and stew in a rising uranium price environment, or do you go it alone? How are you viewing? Have you changed your thinking around Macusani and the way that you treat that, the way that you create value?
I think, Matt, what we've seen, and you're right, you're seeing a lot of zombie projects again coming forward and getting financed because the prices are strong, and I think that very much tells us we're in a bull market on uranium. As we've always said, as a lithium developer, we get little or no value in our market cap for the uranium. Even if you look at the old PA, it's over 600 million NPV US, and you apply a metric of 0.7, 0.8 times, which is the average developer metric, you'd be looking at something that'd be 400 or 500 million market cap on its own. It's a big project with fantastic economics, and for us, the proof of that is we're getting more and more people telling us why we should hand the keys over to them or put it with their less good projects to make them look better. And so we know the timing is right to spin this out, get it into its own vehicle. It has to, in our book, remain under our operational team and with some of the key relationships we've built, because the community relations, they're one of our key assets, and we're not going to do anything to risk those. It's also a project that, $300 million to build. It's a relatively low cost. The flow sheet is baked. It's ready to go. There's a bunch more drilling we can do. We think this gets a lot larger. But again, to achieve all that, it needs to be in its own vehicle, and we believe it can move quickly through PFS. And again, in an environment in Peru that's definitely becoming more and more pro-mining. And, if you take them at their word in terms of speeding up environmental permitting and the permitting to build a mine, it's a project that can move quickly and really, has the potential to be built relatively quickly. Again, fantastic OpEx and low capital. So yes, it's a real project. And again, as I say, that's just not me talking. I think it's, we've probably had half a dozen of the key names in the uranium space reach out to us again and tell us why they would be better at moving it forward than us. And it's time to get it out there. I also think, Matt, yes, when you spin it out, it's done at a certain value and will raise money. But I think when it's in its own vehicle, it can really start to add value. And I think, if you put it in its own vehicle, within a pretty short period of time, it can be at 150, 200 million market cap or beyond. But it needs to be in its own vehicle to do that.
Okay. Now, just in terms of timing of that one, again, you're looking at a market where perhaps the excuses of price incentivization doesn't really ring true anymore. And, most companies can make money at these prices. Maybe they're holding out for 140, 150, who knows? But there's nothing stopping companies starting the process of moving these companies forward at pace. For you, with obviously Macusani, what are you thinking with regards to the timing there? Because obviously you still got these now, 30, 32 out of 174 concessions in dispute with this sort of second kind of final attempt, as it were, by Incomet and Minem. It doesn't stop you moving that project forward. So what are you thinking in terms of timing and how do you go about it?
It doesn't stop us at all. And, again, I know people focus on the 32, and understandably so, but, when we bought Plateau, you did it with a lens of, okay, if we never get these back, do we want these? And absolutely we do. I think we can get close to doubling the resource through the drill bit pretty quickly anyway, on the uranium side. And so for us, Matt, it's about keeping it simple. Let's not overcomplicate the transaction. Let's find, we've learned from, some of the work we did in the summer. We've obviously tightened up stuff internally and made sure we're ready to go. And I think for us, it's really just about let's be as efficient and optimize this as much as we can and get it out there into its own vehicle in a good way where it's set up to succeed with the capital it needs. But let's do it as quickly as possible and not overcomplicate things. I think once it's up and running, you then have a company that could potentially look at other deals. We've had all these people trying to get us to do a deal with it in terms of putting it out, but I think get it out there. It's such a big quality asset in its own right. It will do well in its own right. And then you're much better positioned to look at other deals if they're appropriate or if they're a good fit at that time, rather than horse before the cart, if you like. So keep it simple, get it well capitalized, get it out there and get it trading, and I think it'll do well.
Okay, fine. Well, look, I guess that's all the questions I've got answered. You were going to go and pound the streets, press the flesh, throw a few business cards at people over in Riyadh. And hopefully you come back and update us and let us know how that went.
Yeah, absolutely. Absolutely, mate. Awesome. Thank you.